Okay guys, so if you're watching this video, you're either in drawdown on your account already, or you're just trying to learn from a trader, a profitable trader, how I deal with drawdown. So in this video, I'm going to go over, I just have some bullet points, some tips on basically how to deal with drawdown and how to get out of it, how to reduce the amount of drawdown you actually go into on your account, and just overall how to become a better trader. Because if you think about it, if you master each individual aspect of trading, I wouldn't even say master, if you're great or even really, really good at each individual aspect, then it will compile together to make you a very, very good trader, which is obviously the aim for all of us in our trading. And we're always chasing to become a better trader, because if we don't have a 100% win rate, we're not a perfect trader yet. So obviously you can't chase a 100% win rate because it's not going to happen, but we can always push and strive to improve on our previous results, which is what we're doing. So just want to say at the start of this video, if you are a trader that is currently in drawdown, that's completely normal. I have drawdown on my accounts. Last month was a losing month. This happens, which meant that for the year I was in drawdown. I was minus, I think, 3.5%, and this is completely fine. And I'm okay with this because I know exactly how to get out of it. I know exactly what's going to happen next. And the main reason why I actually have this faith and this belief that losses happen and it's not really the end of the world is because I know my strategy. I know how it performs over the last 3 years. I've traded live on the accounts, on personal accounts since 2019. So you could say that's almost 5 years of experience trading live in the Forex market. So during those times, you can probably imagine how many times I've actually been in drawdown on my accounts. Back in the day, when I was trading, these small flip accounts, the drawdown was rather substantial in comparison to, percentage-wise to what it is on my accounts today. But that is something that you'll learn. I see a lot of traders that go into 80-90% drawdown on their first account, maybe even 100% drawdown. We've all been there. But if you risk manage, that will never happen to you. Unless you have like a crazy 90 trade losing streak. But I think the likelihood of that happening is very, 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 very slim. You could obviously lose 20 trades in a row. That could happen. If you don't have a high win rate, that could easily happen. But you just need to be prepared for when that does happen. So you don't want to be the type of trader that goes in this drawdown, whether it be 5% drawdown, 15% drawdown, 30% drawdown. This can all happen for the average trader. You could easily go 15-20% into drawdown. And I feel like people see that as very, very bad. But if you think, let's say you're taking 5 to 10 trades per month, and let's say you go on a little losing streak. You lose 6 trades in a row the first month, and you lose 5 trades in a row in the second month. So you've lost 11 trades. And let's say you have one winner in there as well, and you're using like a 1-to-3 risk to reward. So 3% for the wins, then you have 11% for the losses, you're minus 8%. So how do you actually get out of this minus 8%? A lot of people, I probably say the majority of traders, and this is why there is such a small amount of traders which actually make profit in the markets, they start upping their risk. They try and get out of this drawdown as quick as possible. I was guilty of this back in the day. I would enter a position, I'd lose, but I thought, you know what? I still think that trade is valid. I still think it's going to go to my target. I can't be wrong. And that mindset of I can't be wrong, the markets aren't giving me the right entry, or I can't possibly lose today. I can't possibly lose this week. I have to finish the week, or have to finish today on a win. That's kind of the mindset that a lot of traders actually go into the markets with. And it can be very, very dangerous. So if you are in drawdown, do not up your risk. If you do it, let's say the first time you do it, it works and you get out of drawdown, and now you're like, okay, that's how I get out of drawdown. I up my risk, I enter the same positions, and obviously because you're risking more, you need less pips, you need less reward for your risk to actually get out of the drawdown. But we all know in the long term, this will not work. It might work for the first couple of times, or it might work one time, but when you are actually wrong, and let's say you're buying and you keep buying and the market's dropping, it's going to be very, very bad. The drawdown is just going to go up and up and up. At this point, you don't want to make the drawdown worse. You want to just trade as you normally would. So you need to be comfortable being in drawdown. And I feel like in the current market the current industry with traders trading with prop firm accounts, it's made it so much harder for people to deal with drawdown. And this is because they go below that even number. So you buy an account, you open your phone, you log into the account's sitting there, $100,000. So there's $100,000 in the account, and you have a 10% overall loss, you have a 5% daily loss, then you have your profit target. And numbers in your account kind of act as psychological numbers in the markets. You'll see gold bounce off of these psychological numbers. You'll see GU do the same thing. I feel like it's the same with your trading, with numbers in your trading account. You're going to react and trade differently if you're slightly under that 100k. If you're slightly over, you're more comfortable. You have a little buffer. If you lose a trade, it doesn't matter. You're now at break even again. Whereas if you go under that 100k, you're now only in 5 figures account. You're only trading with 5 figures, and it can definitely affect you a lot. It won't be like something where you'll suddenly start entering different trades. You'll suddenly start doing this. You'll suddenly start doing that, making loads of mistakes. It's not going to be as noticeable as that, but you're definitely going to see an effect on you if you are trading an account and it is below your original balance or a psychological level. And by this, I just mean like an even number. So if you're trading an account, let's say you start at 60k and now you're just breaking above 100k in the account, this is going to probably affect you because you've reached that next level, that next barrier in your trading. And a lot of times people will then drop down and maybe hit a losing streak after this. And this will obviously cause them to go into drawdown, and they do struggle to break above that sort of level. So I feel like the only way to get out of drawdown is to have full trust in your strategy and use fixed risk. People often say, oh, well, if I'm on a losing streak, I want to minimize how many losses I take and how much drawdown I go into, so I won't use fixed risk. They'll start reducing their risk. But I've tested this with my strategy, and obviously if you haven't tested it with yours, don't just blindly follow what I say. Definitely do your own research on your own trading style. But I found that my losing streaks don't tend to be that long. So I'll have a couple trades, maybe 2 or 3 trades on average that I'll lose, and then I'll have a winner. So after 2 trades or 3 trades losing, I don't then want to quarter the risk I'm actually using, because then I'd need 4 times the amount to get back into profit. So let's say I lose 3 trades, I'm minus 3%. And you know my trades, they are 1 to 3 risk to reward. So if I actually reduce my risk to 0.25%, I'm now making 0.75% for a winner. So I need 4 trades to get back into profit or get back above break even on this account. And again, this isn't too bad because 4 trades, that's not too bad. But if I maintain the same risk, it's only 1 trade. And the way you can actually find out if this is good to use fixed risk or not is to look at your strategy. Look at your backtesting. How many trades do you lose in a row on average when you're in a losing streak? You're going to get like 1 or 2 trades where you just lose next to each other. But on average, how long are your losing streaks? What's your average consecutive loss streak? And what's your average consecutive winning streak? These are all stats which you need to know, because if you're following the exact same steps for your strategy, trading live as you were like backtesting or forward testing, then it's going to be very, very similar. So if in your backtesting you see that your average losing streak or your maximum losing streak is 6 trades, you know that after 6 trades, your losing streak is going to come to an end, or your losing streak is likely to come to an end. If your maximum losing streak has only been 2 trades, then you know after 1 loss, after 2 losses, you don't have to worry, because based on averages with your strategy, you're going to win. And because you've tested it over the last year, 2 years, 3 years, obviously the more data, the better, you know that it works in the long term. I see so many people focusing on how much can they make in one day, or how much can they make this week, or how much can they make next week. And they don't focus on how much they can make over the next year, over the next 2 years, 3 years, 5 years. And these people are saying, like, let's say I post a post on Twitter, for example, and I say, oh, this is how much I'm up for the month. And let's say it is 3% profit, 4% profit. Countless people will say, oh, well, it's only 3% profit. You can't be a professional trader. You can't trade full time on only 3% profit. But what these people don't realize is they might have a good month where they make 25% profit. But can they do that consistently? Absolutely not. If you put that into a calculator and with even a small account of £5,000-10,000 or dollars, they'd be having hundreds of millions in the next couple of years. So make sure you actually test the numbers before you believe someone how much profit they're making. That's a little tip for you guys. But back to the point. If you're happy making a couple of percent per month, then you're going to be taking less trades because you don't need as much profit for the month, which means you're going to be waiting for the highest quality setups, which as a result means less trades taken, less risk exposure in the markets. And let's say you have a strategy where you take, let's say, 4 to 5 trades per month. Worst case scenario, you can lose 4% in a month. I feel like that's a pretty good scenario, whereas if you lose every single setup you take in that month, you're only down 4%. I think that's pretty amazing. Whereas if you're someone that trades every single day, you could technically lose. I know there is weekends, but let's just say, for example, there isn't weekends in the month. You could lose 30% in a month. So there's going to be months where that person that takes 30 trades is going to make more profit because obviously they could have a massive winning streak, and a 20 trade winning streak or a 30 trade winning streak most likely is going to make more profit than a 4 trade win streak, because it is dependent on the risk to reward, but most likely that is going to be the case. However, which one has actually had the most drawdown over the year? Let's say one trader, or trader A, has 30 trades per month, for example, and the largest drawdown was 25%. And it's not too bad. Obviously depends on the results they're actually making profit wise. But let's say trader 2 makes 4 trades per month. So their biggest losing streak is going to be, well, in a month, 4%. Let's say for the year, their biggest max drawdown was 6%, for example, or 7%. Let's go with 6%. So we have 25%, we have 6%. Even if trader A that has made a hell of a lot more profit, but they have more drawdown, even if they have more than trader B, I'd rather be trader B. Number one goal for you as a trader, trading your personal capital, is to preserve your capital. That's always the number one goal. As an investor, the main goal and the main rule to have is to not lose money. So if you are focusing on growing a strategy or growing a track record long term, don't focus on how much money you can make, or how much profit can I make this month, how much profit can I make this week. Focus on minimizing your drawdown, but still making profit. Because let's say you only made 10% for the year, let's say 10% for the year, and your overall drawdown was only 4%. So that means for every 4% that you risk, you make 10%. If you do the maths over the year. And I feel like this is pretty good. And I'd rather invest my money in someone like that, because your profit might be low for most people, but because they have such low drawdown, this is when you can actually increase your risk, because you know that you're not going to hit a massive losing streak with this strategy. Whereas with trader A that has 25% drawdown for the year, if you're risking 2%, your account could be down 50%, which I feel like a lot of investors, if you are looking to get investor funds, they're not going to be very happy about this. Whereas if you're risking 2% and your only maximum drawdown is 8% for the year, this isn't too bad. And if we're speaking about rules to actually have to limit your drawdown, the best one is to have a daily loss limit or a weekly loss limit. And a lot of traders I know that are fully profitable, they'll have a limit of trades they actually take per week. And this is actually different to their loss limit. So let's say that they can maximum trades per week is 5. Their loss limit is 3. So they can only lose 3 trades in a month, or in a week, sorry. So if they reach that 3 first, obviously 3 losses before the 5 trades, they stop trading. This is to limit the amount of drawdown they actually receive, because they know that after 3 losses, you can make irrational decisions. Even if you are the best trader, we're not robots at the end of the day. There's going to be times when you do break rules, you do enter trades that you aren't too confident on, just to try and make the profit back. And this is normal for a human being. We're not going to be perfect. But having those rules in place, having it in front of you when you're actually trading, it's going to help a lot. It might not be too noticeable, but it's definitely going to help. And all the small things do actually add up. And the reason you can actually have trust in this is from your backtesting, obviously. I'm going to do another video on having extra sources of income and how to actually build other sources of income by using your trading profits, because I do feel like this is another way to actually help you get through drawdown. The less reliant you are on one income source, for example, trading, the less pressures are going to be on that income source. And I feel like having maybe some passive income or something outside of trading is going to be a lot more beneficial to your trading performance in the long term. So, moral of the story, stick to your plan because it's there for a reason. You backtested for 2 years, 3 years, you forward tested, you got live results. Oh no, you're in a bit of drawdown. It's not the end of the world. A lot of people see it as a bad thing and that they can't get out of this drawdown. And this is mainly because of prop firms. If you lose it, if you're down 10%, the account's blown. It's not ideal. If you're down 25% on a personal account, it's not the end of the world, because a couple of good profitable months and you're completely fine. You could lose 6, 7, 8, 9 months of the year, be profitable for 3 months, have a good risk to reward, and you're up for the year. That is always the main goal. To be up for the year, not for each month. It's all about the long term of trading, and it's a long term that will pay the bills for you. If you make profit this month, that's good, but are you still going to be able to put food on the table and make profit in 2 years' time? That's all that really matters. So make sure if you are in drawdown, stick to your rules, stick to your plan, and hopefully you'll end up in profit very, very soon.